Good morning, trade pros. Welcome to our morning market update for Thursday, March the 28th, 2019. George Papsov, Trade Pro Academy. It is day 2 of laundry day. Hence, I'm wearing another dress shirt. This doesn't happen often, 2 days in a row. I hope you guys enjoy it. We got a lot to talk about today, including some Trump tweets. Let's get right into it. It's a beautiful Thursday, and I hope the lights are good. How's the lighting situation? Should be good. All right. Let's start with the morning market fun fact. On this day in 1985, which is my birth year as well, after 193 years, a sitting United States president visited the floor of the New York Stock Exchange for the first time ever, and it was Ronald Reagan. He rang the bell open on this day in 1985. Cool little fun fact. All right, this morning as we're waking up, we're going to do a little bit of an update on bond yields. Bond yields are front and center for every institutional and major investor out there. And as traders, it's important to us equally. All right, so bonds continue to slide. The 10-year U.S. Treasury note fell for the 6th consecutive session yesterday. As of the end of Wednesday, it's the longest slide since early December, where the yield fell for 8 consecutive days. So we're pretty close to getting that record. Today, the yields are up slightly overnight, but it closed at 2.374% Wednesday. It's a new 15-month low for the yield. All right, so the yields are continuing to slide lower, and as yields go down, bonds are going up. And as bonds go up, money comes out of equities to purchase those bonds. So you see a reallocation or a shift of assets out of equity and into bonds, and we're seeing that in the markets. And that's why yields move together with equity markets. So we need to track that. It's very important. That's front and center at the moment for every trader. All right, this morning we had some news that there's some progress on the U.S.-China trade talks relating to intellectual property theft and also forced technology transfers, where China makes firms force their technology into China from the United States. All right, so there's a little bit of optimism out of that, but no real specific details, which takes the optimism out slightly. All right, this morning we also got some GDP numbers, and we'll cover those in a moment. On to our next topic of the day, the Brexit update. All right, Parliament yesterday took control for a day from Theresa May. They basically called the shots and held a vote. It was a vote with 7 options. First of all, if you're going to do a vote, try not to have 7 options. It's really hard to pick one when there's 7. All right, that's the reason that we're sometimes dissatisfied as consumers. You can spend $1,000 on a pair of jeans and still be dissatisfied because there's so much option. All right, really good TED Talk on that subject, by the way. You guys check it out. I forget what it's called. All right, what happened with the 7 option vote? All 7 options failed. Not one of them got any significant or majority of approval. So basically, the Brexit process is this. The Parliament is failing to agree with Theresa May's plan. Theresa May says, all right, you guys handle it for a day. And they disagree on everything. They just say, strike down all 7 options. The only thing that did pass the vote, get this is almost comical, is that they do want to leave with some kind of plan. They don't want a no-deal Brexit, but they can't agree on one of 7 options. My advice for the Brexit process in the UK, if you're willing to hear it, is this. Eliminate some of those options, all right? The fact that there's 7 options says that there isn't any congruency in Parliament. There isn't any significant level of agreement. It was trouble to begin with. The second heard 7 options, I'm like, none of those are going to pass. And here we are. All right. Theresa May has even said, I will resign if you guys just take the deal and run with it. Just do what's right for the people. I will resign my post, go with the deal, revise it slightly, propose it to the EU. Let's get this thing done. Northern Ireland DUP party, which is an ally to Theresa May, said they're going to continue to reject her deal anyways, with or without her. They're an ally. That's a friend. Jeez. This reminds me of morning market. This reminds me of a situation where, I talk to a lot of people about self-development, personal development. I like to see people do well. And so when I go to the bar, I'm not really the most exciting person. I won't really feed negativity, and I won't let somebody get away with something that I think is negative and toxic to themselves. And this is what the Brexit process reminds me of. I don't want this. I don't want that. I don't want this. I've heard this a million times. I don't want to work for this person. I don't want to do this. And I stop them and I say, hold on a second. What do you want? Silence. In that silence, I could get a drink and come back and say, well, have you thought about it? No. It's the first time they're thinking about it. And so this is what I challenge everybody to do is, let's start thinking in terms of what do we want? Because whatever we hold in our imagination, we create in the physical realm. If you're thinking of what you don't want, unfortunately, you're going to create those very same things. It's the power of thought. Research it. All right. Next topic. Canada is flush with debt. I thought this was interesting. I know that the majority of our listeners, the people that tune in, are from the United States and abroad internationally, but we are in Toronto. We're surrounded by Canada. All right. And I wanted to give you a little bit of update because it's important. Because we've had the lowest interest rate environment in Canada for a while, despite the fact the Bank of Canada has hiked rates 5 times since 2017, the rate is still just 1.75%. Obviously, that's not the rate that we get. It's the rate that the bank gets, but it's a low rate. And the debt to disposable income rose to a record number in 2018, 174%. Right? That means it'll take people 174% of their paycheck to pay off all of their debt versus 148% a decade earlier. Now, get this. This is the shocking part. It is much higher than where the U.S. was when it led to the great housing bubble burst in 2007 and 8. That was only at 125%. So a lot of Canadians are surprised to find out that, hey, we look at case studies in the United States and what happened, but we're actually worse off than that at this point. From a debt to household income ratio, we've surpassed that. And the housing market's just absolutely gone bonkers. I'm not complaining because I'm benefiting from it, obviously, as multiple property owner, but it's just looking like unsustainable for the short term. I think we are going to get a little bit of a pullback even in the housing market. All right. I know that's not going to be a favorable opinion to a lot of real estate folk in Canada. Azalea, sorry. Azalea's trading now. She don't care. Auto loan delinquencies in Canada hit 0.97%, the highest since 2008. HLOCs, or home equity lines of credits, totaled $243 billion in Canada. 11.3% of the total household debt is that. Per capita, home equity lines of credit are $4,849 in total. That's more than quadrupled in the figure in the United States at only 1,000. All right, and that the currency exchange is taken into account there. And we're seeing a lot of the Canadian banks increase their provisions for losses for the upcoming year by 23%. Some of the bigger banks like TD and the notorious speculator CIBC is up 202 times. They've doubled their increase for provisions of losses. So we're starting to feel the heat over here in Canada, figuratively, not literally. It's still cold. Today's markets in Asia, Japan's down 1.6, Hong Kong's flat, China's up or down 1%, India's up 1.1%. Mixed markets, mixed bag of nuts out of Asia. In Europe at midday, London's up 0.5%, Paris up 0.1%, Frankfurt up 0.4%. No major economic news overnight in any of those markets. Futures in the United States, everything is flat across the board. We're trading around yesterday's closing price after a dump in equities that some of our members were able to catch. We had a positive the live traders of yesterday traded positively, and the majority of them were green. But still, there was a challenging day. I'm not going to lie. It was challenging to start. And then after the late stages of the webinar in the trading room, it started to really open up to the downside. Crude oil this morning is down big. Traded to, let me just have a peek over my shoulder. It's down huge. 58.20 is the new overnight low. Some liquidity around the 58 marker, and we will at some point probably see that level. Crude oil open at 9 a.m., so it's 11 minutes into the open. And Donald Trump was the market mover this morning. He called on OPEC to increase the supply and said the price is getting too high. Let me read the exact tweet because there's 2 words in there that I laughed at very hard. Donald Trump tweets, very important that OPEC increases the flow of oil supply, basically. World markets are fragile. Price of oil getting too high. Thank you. Thank you is the best part. And then Victoria summarized it nice. What did you say, Victoria? Yeah, cheaper oil. Thanks. That was pretty much the majority of the tweet. And not surprisingly, oil dropped. All right, gold prices are pretty much flat. Bitcoin's flat as well, but holding that 4,000 marker. And this morning, we had initial jobless claims come out, lower than expected, which is a positive. 211,000 people last week filed for unemployment claims versus 220 expected. Continuing claims, or the 4-week average, is also now lower, which is good. So that's a pretty good number. Prior number was revised lower. So across the board, this report was positive for the equity market. Even if it's temporary reprieve from the selling, it's still positive nonetheless. This morning, we got Q4 final GDP out of the United States. The final GDP number is the one that causes the least impact on the market because we've had iterations of it before. Preliminary. All right, we have advanced, preliminary, and then final readings. Final readings are pretty much no one's surprised. Big deal. It came out as expected. All right. Although it didn't, it came out 0.1% lower. Personal consumption was also 0.1% lower. All in all, very slight miss. But we're on to the now Q1 GDP figure is what the market's focusing on. It's the latest data. It's final, but it's a late number. We're kind of over Q4. All right. For the rest of the day, busy and heavy economic calendar. 10 a.m. pending home sales. 10:30 natural gas inventory. 11 a.m. Kansas City Fed manufacturing survey. 11:30 Fed's Bostic speaking from the Bankhead to Buckhead prosperity for all. Hey, I think Buckhead, if he's speaking in Buckhead, he's in Atlanta. We're going to send our fellow oil desk manager to say hi to him, Buckhead. I loved Buckhead. We spent some time there with a friend. Really nice. Very young crowd. Nothing like feeling 10 years younger than visiting Buckhead late evening, which did wonders. 1 p.m. results of a 30. Victorio's interested here. It's right up your alley for sure. I was peeking over my shoulder. I was trying not to look where everybody was looking just because the age thing. 1 p.m. we have results of a 32 billion 7-year note auction. 1:15 Feds Williams speaks. 2:30 Feds Williams speaks again. This guy likes to speak. 3 p.m. farm prices. 4:30 money supply and balance sheet update for the week. 6:20 Feds Bullard is going to speak on U.S. monetary and economic policy, and that's it. But that's a lot. Today is the day you absolutely must have a news wire. Expect a little bit of news-driven volatility, so a little bit more chop as positions rebalance. Start with the 3 rules today. I got a feeling that we're going to start a little bit slower and then expand volatility as the session wears on. That's been the case for the last 2 weeks, really. Start choppier, then we get a nice continuation. Your goal as a trader is to not get chopped up so you have some free cash flow for the day to play with the actual trends. And that's sort of how do you do that? 3 rules. It's only 3 rules that you got to follow. Only 3. They're not easy, but they're very tangible. Here's what they are. Rule number 1, trade less size. Rule number 2, trade less often, less frequency of trades. Rule number 3, take quicker profits. All right. And don't be afraid to scratch trades. It means if you get into a trade and it's not doing what you want, get out. You don't have to take a full loss. Some of my best trades are my scratch trades, right? By losing less money with scratching, you're actually making more and you're getting to keep more. And that's the goal of trading. It's not all about getting in here, being a superhero, making $1 million. All right. There's a lot of other people that sell you that dream. I'll let you buy it from them. But I'll tell you this. Trading is about minimizing your losses, giving yourself a chance to learn while keeping your risk tight. All good things come from that aspect. I'll finish it off with a saying. There are old traders and there are bold traders, but there are no old, bold traders in this business. You guys take care. Have a great day. All the best. Got to turn around and open up the trading room. Ton of people waiting for me, and I'm getting blabby. Appreciate you guys. I send you love, joy, and happiness, each and every one of you and your families. I will see you tomorrow for the last morning market update of the week. And then the team will have 2 videos for you this weekend on YouTube. And we have a huge day on Monday for YouTube stuff. I'll talk to you about it on Monday. Take care. Have a great day. Goodbye. Can't believe YouTube let us do this. It's going to be the first and last. Well, thankfully. That's why we got a first. All right, let's get started. I'm going to talk to you about the S&P 500. Victorio is going to cover NASDAQ. Marky's going to do Dow. We got a full lineup today. And Steven is back to work at his desk. I'm really excited to have him back. We miss Steven. Crude miss Steven. She texted me, said, "Where my daddy at?" And I said, "He's coming, don't worry." Let's start out with the S&P 500. And I'll give you some levels quickly and briefly, and I'll hand it over to the other gentleman. Let's jump into it with the ES contract.